Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 8th of October here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, China's stock rally fizzles as traders question Beijing's decision to hold off on unleashing more stimulus.
The surprising consequences of trying to protect American jobs by hitting China with ever larger tariffs.
And an uncomfortable reality. Treasury analysis reveals Rachel Reeves' eye-catching tax hikes on private equity and non-doms could cost more than they raise.
Let's start with a roundup of our top stories.
A large rally in China's stock market has cooled as policymakers opted to hold back on adding more stimulus measures. The benchmark CSI 300 index surged by almost 11% in the opening minutes of trading as the market reopened after a week-long holiday. But around half of the gains were erased after officials at China's top economic planner failed to outline new stimulus measures. Saxo Bank's chief macro strategist John Hardy says Beijing will need to go further if it wants to spur additional growth.
When you look at the raft of measures that were introduced coming into this long Golden Week holiday, a lot of it was around sort of easing credit. So lower rates, looking at the mortgage market and sort of promising some kind of support for the stock market, which is why we've seen such a profound reaction in the stock market. But to really get the economy going again when you're in a balance sheet recession, let's look at the Japanese experience, let's look at what has happened since the global financial crisis. You need to print money, you need fiscal stimulus, not just the credit side. And China is going through a balance sheet recession. So we need this big fiscal announcement. Everyone's going to be asking where it is.
John Hardy's comments chime with wider scepticism from analysts over the surge in Chinese shares. Many strategists and and fund managers have viewed the recent rebound with wariness and said they were waiting for Beijing to back up its stimulus pledges with real money.
The price of oil has fallen as a lack of additional stimulus from China has sparked a risk-off mood across markets. Brent crude fell below $80 a barrel in early trading, ending a 5-day rally that began because of fears that Israel might attack Iran's oil infrastructure. Bloomberg's Stephen Stapczynski says that the issue is still front of mind for traders.
Still, it could go further if we do see some sort of attack on the infrastructure. Now, the level, if we get about 1.5 to 2 million barrels a day of Iranian crude off the market and OPEC Plus doesn't step in to kind of fill that void, you're seeing probably Brent continuing up to the mid-$90 level, according to Goldman.
Stephen Stapczynski, who leads our energy team in Asia. Hurricane Milton is also expected to impact oil and gas production in the Gulf of Mexico in the coming days. Chevron says it has shut in or capped oil production at the Blind Faith platform in the Gulf ahead of the Category 5 storm's arrival.
Those oil industry precautions came as Milton is labelled the Atlantic's strongest hurricane this year. The Category 5 storm is heading towards the Florida peninsula with top winds of 180 miles an hour, though it's unclear where it will make landfall. The region is still struggling to recover from Storm Helene's devastation. Governor Ron DeSantis says the state is preparing for Milton's arrival.
The executive order that I signed over the weekend also orders all disaster debris management sites and landfills to be open 24/7 in the lead up to Hurricane Milton. We had a lot of debris left from Hurricane Helene on Florida's Gulf Coast. That creates a huge hazard if you have a major hurricane hit in that area this week.
Governor Ron DeSantis has declared an emergency in 51 Florida counties. Milton will be the second major storm to strike the state in less than 2 weeks and the fifth hurricane to hit the US this year. Moody's RMS Event Response has estimated privately insured losses could range from $8 to $14 billion, with another $2 billion being covered by the National Flood Insurance Programme.
Now, here in the UK, Chancellor Rachel Reeves is reviewing her tax pledges on private equity and the ultra-rich. Bloomberg has learned that both of the tax hikes are in question after Treasury analysis suggested that they might cost the UK taxpayer more than they raise. Bloomberg's James Walcock has more now.
The Chancellor has built her political brand on one message.
We were elected because for the first time in almost 2 decades, people looked at us, looked at me, and decided that Labour could be trusted with their money. Because we saw what happened 2 years ago when governments play fast and loose with the public finances.
Now, Rachel Reeves is trapped in a fiscal straitjacket. The state needs money, and she has pledged not to touch the 4 major taxes that raise 75% of government revenue. And Treasury Analysis says her ideas might cause the wealthy to flee instead of paying up. Some economists have suggested a tax on investors leaving the UK as a way out, others changing the fiscal rules. The Chancellor privately receives her second round of pre-budget OBR forecasts today. Ultimately, they will shape her final choices for this make-or-break budget. In London, James Woolcock, Bloomberg Radio.
Britain is going to rely on the European Union to top up its energy needs this winter after closing its last coal power plant. The UK plans to up its energy import by a third after improving its undersea cables to the continent. The shift means Britain will have more energy capacity, but the green transition makes it more vulnerable to global gas prices.
The UK is attempting to fast-track tech innovation with a new body. AI, space and healthcare technology will all be affected by the change. Bloomberg's Tiwa Adebayo has more.
Landing just days before a major government investment summit, officials are hoping the new Regulatory Innovation Office will recharge the business climate. According to the government, it's been designed to reduce the time entrepreneurs wait to get inventions to market and streamline regulation. The plan will initially focus on healthcare AI, autonomous vehicles and synthetic biology, with expansion plans in the future. But the changes, inspired by Boris Johnson's COVID-19 task force, could come too late for the Starmer government, already facing declining sentiment among businesses and consumers. In London, Tiwa Adebayo, Bloomberg Radio.
Now, in a moment, we'll bring you up to date on the big moves that we've seen in Asian stock markets this morning, and also bring you details of our Big Take report, looking at the consequences, sometimes surprising, of tariffs on Chinese imports into the US. But another story also caught our eye this morning. This is about Japan's cultural exports for the small screen. I hear you have no Netflix subscription, Stephen Cowell.
No, I don't. I feel like this is adding to the long list of things that I have not seen that people are going to be referencing in conversation. But Garode Reedy, our opinion columnist, has been writing about Tokyo Swindlers, which is one of the streaming service's most watched shows internationally. It tells the stories of fraudsters, heists, and is based partly on actual events. Now, Garode argues that it's a sign of how successful Japanese TV exports could be, using depictions of modern Japanese society, so perhaps breaking some of the stereotypes of things that, you know, are usually exported when it comes to Japanese TV. And this is something that Garode says could be helpful to the government's goal of wanting to quadruple the total value of its cultural exports in the coming years, part of a revamped Cool Japan strategy.
Cool Japan. That's good.
So this is something that Garode says is a good example of a concept that could work.
Yeah, and look, everyone wants a slice of that cultural export pie, don't they? I mean, I beetled off and looked up actually what the UK is exporting. RuPaul's Drag Race, Frozen Planet 2. Apparently last year the UK also had a record-breaking year in terms of the amount of money that it brought in for TV shows. But yes, this is the new platform, isn't it? Everybody wants their culture to dominate on all of these global streaming services.
Yeah, very interesting one to watch as well. You can read that piece on Bloomberg.com and on the terminal. Well, traders are back to work after the Golden Week holiday in Asia, but the rally in Chinese stocks in the first 90 minutes of the day has faded. Joining us now is Bloomberg Asia equities reporter Winnie Su for more. Winnie, great to have you with us. Talk us through what happened then. It was a moment of excitement that faded quickly.
Exactly. The market expectation into this rally just has been so high. Like you mentioned, the onshore market was closed for a whole week. And during that week, the Hong Kong stocks continued their rally. So I think just kind of taking you back a little bit, the excitement has been building up in the past 3 weeks, from the PBOC's joint briefing to the Politburo, and people are just expecting more policies to come from the government. And the NDRC meeting that we just had a few hours back seems to not meet a lot of these sky-high expectations from traders. And that's why we're seeing Hong Kong rally losing some momentum, and also the China stocks paring back a little. And a couple other things are happening here. Some profit taking, because you saw the Hong Kong market having rallied about 30 to 40 30% for the past couple weeks into today. And also we're seeing that rotation from the H shares to onshore A shares because people couldn't really trade A shares until today after the holiday.
Yeah, absolutely. So perhaps a bit of a rethink then after Golden Week. And it also does seem globally, though, that strategists and fund managers are still quite sceptical.
Yes, absolutely. So when you just look at the technical levels, we're seeing some overheat. And also for the past 2 weeks, the RSI is showing that we're in the overbought range. Nomura the other day cautioned that this might look like another 2015 bubble burst. And things might just be fading away after a strong rally if the policies are not able to support. So that would be something that people are watching, monitoring to see if we have data to show that the consumption recovery is really on track. And that would be something very key to see what the numbers come out of this past week of Golden Week holiday. And also if we see more specific policies to follow through and how big the policies are and if the government is actually able to implement those. So a lot of global funds are still waiting for that to happen before they add more to their China exposures.
Okay, so lots of question marks over that as well. What about the impact on other markets from what's happening on Chinese stocks?
Right. So we're seeing that spillover effects to other markets because lots of underweight in global funds right now. So in order for them to beat benchmark in the next 2 months, we're very close to year end, they have to add more to their Chinese exposure. And that is at the cost of some other regions. And we're seeing money being rotating out of some other Asian countries, including India, that has very high valuation right now, and also Japan. So it's a reversal trade of what we saw earlier in the year of selling China and buying Japan. So we're seeing that flow to reverse. And that was mentioned by JP Morgan, Morgan Stanley, and also BlackRock, that as they upgrade their weightings on China stocks, they're actually paring back expectations for their target levels for Japanese stocks. So these are some of the risks that global investors are flagging.
Yeah, okay. Winnie, thank you so much for being with us this morning. Bloomberg's Asia equities reporter, Winnie Su.
Now to today's Bloomberg Big Take on the unexpected consequences of tariffs. Our reporters have been to rural America to examine what happened in Pittsview, Alabama, when the US imposed punitive tariffs on Chinese manufacturers. The surprising consequences of trying to protect American jobs. We've got our Asia government and economy correspondent Rebecca Chung-Wilkins with us for more on this story. Take us through the tale told in this piece then, Rebecca. What happened and why the tariff battle arose?
Well, it's really a story about two towns in America and two big companies that produce and manufacture shipping container trailers. One is a US domestic firm based in Alabama, and the other is a firm that is owned originally by a Chinese state company based in Virginia. And essentially, the story is about how both of these companies took advantage and then was somewhat also subjected to this growing momentum to essentially create resilient supply chains that rely less on China. So we saw the emergence from the US company Pitts Enterprises in Pittsview, Alabama, essentially alongside other US companies initiate punitive tariffs or seeking punitive tariffs on Chinese manufacturers. That then was successfully imposed. But as the story from Sean and Bill, my colleagues in the US, show, both companies then end up being subject to this sort of tit-for-tat probes about the nature of both of their supply chains and whether they can really fully divest themselves from any reliance on China's components.
Yeah, so the US manufacturers initially got what they wanted, but in the end, nobody really was happy. The businesses buying the products that they were making weren't happy because prices went up. It really did show this kind of very messy fallout, didn't it?
So on the one hand, Pitts found that they were using frames from Vietnamese manufacturers. Now, customs eventually did rule that actually those frames contained enough Chinese components to be subject to tariffs, and they lost millions in revenue having to deal with those fines as a consequence. And conversely, Pitts, among others, accused CIE, which is a firm originally owned by a Chinese state company, of using a plant in Thailand that was sourcing its frames from Chinese components. Now, CIE was eventually found not guilty of tariff evasion for that probe, but it did cost them. It took a long time for customs to verify and go and check the factories. And ultimately, in both cases, a real hit to the bottom line and, of course, jobs and employment.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.